So the other panelists are a bit late today, so I think we'll get started with Anthony.
Sure.
So yeah, I think, so I'm Joseph. I'm the head of Southeast Asia at Hashed. I look a lot into NFTs and gaming, metaverse, and a lot of the application layer. And I think we'll mainly start with Anthony and his fund token, NFT fund 6529, and then, we'll start with the NFT.
Yeah, hi everybody. The Twitter persona of AC the Collector. Been collecting kind of in this space for several years now, and joined a consortium, we'll call it, but a part of the 6529 NFT collecting fund. The role is to kind of give institutions exposure, anyone really interested in the Grail tier of NFT collections, the exposure to these NFTs. Obviously Punk 6529. The founding partner is, synonymous. I and my partner Jeff here are the more docs members of the team to kind of, interact with the community and kind of learn what's new, what's coming up. And so, excited to be here and kind of share a thesis.
Great, sounds good. Yeah, I think everyone will be pretty interested in like what kind of NFT trends and categories that you're looking at, that you're integrating, that you're investing. So I think if you could share some of the trends that you're kind of focusing on nowadays as a fund, I think it would be great.
Yeah, sure. I think a lot of the collecting we've been doing in this past year has been kind of a catch-up of the social construction that's been built, even since the 2018 super rare early days when there was like 3 artists minting. You had XCOPY, Hackatao, Coldy. We pay attention obviously to the historical significance of the space. The idea is, these are carbon dated assets on chain in a manner that could, survive probably a little better than oil on canvas. And so, instantly the idea was let's fill there, let's grab the XCOPYs and Coldies and Hackataos of the world. But interestingly, my personal collecting side kind of gravitated towards generative art, which is art based from code or just computation or automation. And that's really where, this is a personal collecting opinion, but to me, the perfect synergy between the medium, which was on chain, and the actual artwork itself was just such a good mix that I had been collecting generative art before. Mm-hmm. And I remember buying a Tyler Hobbs piece pre-NFTs where he's giving you a piece of paper that he signed with the code on it, and that was very clunky. You don't know what to do with it. And then kind of the art blocks, autoglyphs, on-chain generative art model really sparked, I think, what people describe as this digital renaissance, mm-hmm. right? Using the new medium of the time. So we have a focus on generative art as well. And then obviously, we have to pay attention to the PFP market. Bored Apes, what Yuga Labs is up to, CryptoPunks, Azukis. So the idea is to kind of blend the exposure in the fund amongst these 3 verticals, and then listen to what might come next, which is, I think, as you're very familiar with, GameFi, using NFTs as kind of this onboarding mechanism that fungible tokens might not have done.
Got it. So I think you touched on GameFi, you touched on PFP, you touched on generative arts and NFT art in general. Mm-hmm. So when you look into, let's say, generative art and art NFTs, what are some of the criteria that you use? As a personal collector, what do you look at? Is it the artist? Is it the art? What are some of the, let's say, checklists or criteria that you normally look at when you make those decisions?
Yeah, that's a good question, because generative art, a lot of these are the art blocks sets are collections of 1,000 pieces. And so how do you decide of 1,000, which one do you want to grab, right? So I think first the idea is to collapse who are the artists that are actually climbing Everest and challenging themselves to create outputs from code that you wouldn't really expect as being code derived, right? And so I think first what we look for is, we try to rank these artists in a tier system. Who's museum ready, who's fund worthy, right? Who has proven themselves through multiple algorithms that they could persist through time. And so I kind of take an approach of lightning has to strike twice in a generative art department for us to really start paying attention. And so within the collection, I think what's interesting is this randomization of what the outputs will look like kind of breeds this the rarity rankings, right? And everyone's chasing kind of trying to get the number one, but you want to collect you don't want to collect rare and ugly. So I think you do need a curatorial eye towards the outputs. And so, yeah, first we filter by artist, I would say. This is, how I would strategize it. And then, we look through what are their best collections. For example, Tyler Hobbs is, hey Mia. Tyler Hobbs has, Fidenza's incomplete controls. So which are the outputs that stand out amongst those collections? And then, yeah, our fund strategy is to collect just the best, which ones have social construction around them and people talking about those outputs.
Got it. Yeah, I think our friend from Dragonfly Capital, Maya, is here. So if you could introduce a little bit.
Morning, guys. Hi, so I'm from Dragonfly. We're a global crypto fund, manage about 4 billion. We started in 2018, had a thesis that number one, crypto is a global movement, therefore we needed to build a global platform. And secondly, that this is a new asset class that requires a native way of research, investing. So yeah, and we've been growing to about 50 people today. So we actually just opened our office in Singapore this week. So yeah, great to be here.
Great. Yeah, we were just discussing with Anthony about NFT art and kind of the criteria that you use to invest. Curious, in terms of NFTs, right? Does Dragonfly invest directly into NFTs? What kind of areas do you look at in NFT infrastructure, in the VC arm as well? Yeah.
Awesome. Yeah, so I think so our fund is structured more of a venture, so we go in and invest in private companies. So we don't collect art, out of the fund per se. That said, personally I'm a collector, and therefore that's why AC and I get along nerding out about generative art. But yeah, we do have portfolio companies working in space. One of them is called TR Lab, which is a fine arts NFT curation platform. We co-incubated a company with Deputy Chairman of Christie's. And sort of the thesis is, this is obviously a digital renaissance movement, which kind of takes that co-collaboration between the crypto industry as well as the traditional fine art industry. So yeah, and it's been really exciting to see. I was just at Freeze in Seoul, earlier this month, and our Basel last year was absolutely amazing. Seeing how chromie squiggles are showing up at art fairs and things like this. And so yeah, it's been really amazing to kind of witness the beginning of our movement.
Awesome. Sounds good. And yeah, I think in terms of trends that you see in the market, so there's PFP, there's generative arts, there's gaming. So as a firm, what do you normally focus on in recent months?
Yeah, so I feel like we have been more cautious on the over past 6 months. I think now that the market is kind of trending to rationalizing. So, but I think the PFP movement is has taken up a lot of the sort of the noise and the attention span for people in the industry. People think about NFTs. Okay, PFP is the first thing people comes to mind, but I think that's just a very much 1.0 of how NFTs is going to look like. I think the challenges of PFPs are is about how do you productize that moving forward, right? So you're seeing, some collections like Yuga Labs and Doodles and are all raising and Proof Collective. And so how do you really build a product suite that binds the community together, right? And how do you create essentially a decentralized IP? So I personally, I'm more of a punk lover because I think it has so much of a, almost channeling the inner art historian here, a historical value being the first genesis of PFPs. And I think if you evaluate the PFP as a piece of art which has infinite upside, it's subjective value, versus a commodity where I think a lot of collections right now are trying to do. I think I'm more for the the former. But that said, I think what the collections are currently doing are incredibly exciting in terms of like how do you build a global community supported by Web3.
Yeah, and I think this is to both Anthony and Maya, but I think PFP NFTs were something that really hit the mainstream hard. They were something that all the celebrities were endorsing. They're something that a lot of retail investors could resonate with. So in terms of separating the good PFPs, the bad, or like the next generation PFPs, what kind of criteria or what kind of things do you look at to kind of separate from the really top and good PFP NFTs in the market to the mediocre?
Hey, Robbie. So PFP is a very interesting, it started off as, I think on a narrative basis, profile picture, right? So you're thinking 2D avatar on your Twitter or your Discord. I think we're seeing the end of that where, is there going to be a new successful PFP project in the year 2023? Probably not the way that Bored Apes had their launch. And so, what we look, I think strategically for us, the longevity, the narrative we like to build is around the historicals. Obviously, Yuga Labs is a massive player in the space, and so you would need exposure to kind of a team building in that scale. But I think, interestingly, a lot of the fundraising that happens on these PFP teams is kind of create a lot of excitement. But the question is, do they know what to do next? Yes, they're raising money, a lot of money, and they've made a lot of money. But are they, questions around are royalties going to persist, right? Like a lot of these collections trade as fungibles, where kind of like this human loneliness solution to a sense of belonging. You just want to be in the tribe or the community. And so a lot of these trade in and out. People have emotional attachment to their PFP, but as the infinite PFP collections come out, like you're seeing a lot of I think signs of fungible trading there. And so we like to look at it like, let's be safe here. Let's minimize risk on like what might be the next Bored Ape. Like, obviously you pay attention, but the PFP evolution, I think, will move into kind of GameFi and using your avatar in a more 3D environment, right? So you're not just gonna, have a CryptoPunk, as a 2D image. You're gonna try to, create a life around this in the open metaverse, ideally, right?
Got it. Yeah, I think talking about GameFi, Robbie from Immutable is here. So if you could, introduce yourself a little bit, I think it'd be great.
Sure. Robbie Ferguson from Immutable. I drove the wrong way for 15 minutes, so sorry for being late. Immutable is basically on a mission to make Web3 gaming mainstream. And we do this by building zero-knowledge roll-up tech on Ethereum, but also by providing the one-stop shop for games to come and build. So we power some of the biggest games and brands in the world. Disney IP is building on us, as well as Illuvium, who is the largest Web3 gaming sale in the world. Imvu just went live yesterday, which is a massive Web2 metaverse, if you guys remember that one. And we've raised a few $100 million from Temasek, Tencent, Bitcraft, Galaxy, and more. So pleasure to be here and to be chatting.
Yeah, sounds good. I think Immutable has been, a very, very strong player in the Web3 gaming space. Obviously, Immutable facilitated the Illuvium NFT sale as well. Just curious to hear, as a builder, right? What are some of the signs that you can see from an NFT team like Immutable, like Illuvium, for example? What are some of the signs that you see this NFT team will make it? This NFT team will be loved by retail? What are some of the signs?
That's a great question. I actually think we want to make the criterion for whether an NFT team will succeed converge with the criterion for what will make an ordinary game succeed, which is it fun? Will it have high retention? And do they have a good strategy for getting lots of players? All of the delta between making a good Web 2 game and making a successful Web 3 game, we've got to make incredibly easy in order to onboard tens of thousands of game developers and make this mainstream, which is kind of what our vision is. Now, that's obviously not the case today. There's still lots of changes you have to make if you're building a good Web 3 game. What we look at typically is a lot of traditional game metrics, so funding, team quality, proven traction, is the game live, but also what's their tokenomics? What's their commitment to actual Web3? For a lot of companies, it's just a new vertical of licensing, which we're not interested in. We're much more interested in people who are actually leveraging it at the core of what they're building at their game. So, for instance, Illuvium, 100% of revenue goes to holders of ILV. And those are the models we're excited about because that's when you're actually changing the ways you can grow leveraging player incentives, leveraging token incentives, and you can compete with some of the biggest game companies in the world by sharing value. So typically we kind of go through those criterion, but if we want this to go mainstream, a Web2 game should be able to build something and not have to know, how do I design complex tokenomics or in-game economies or build on smart contracts? It's got to be ridiculously simple for them.
Got it. And I think this is a question to all three panelists here today, but so in terms of gaming NFTs, right? I think over the past year or so, we've seen a lot of gaming NFTs that dilute the market. But in terms of utility and in terms of the value that they bring, right? What kind of structure or gaming NFTs are you looking at in the future?
I think building a good game is very hard, and a lot of people realize this, obviously, but they come out with the assets first, they sell the inventory, and then they're like, we'll figure this out, right? And so we try to be very vigilant in our diligence and just be careful. I would say we really, the biggest positions we look at are like the Digi-Daigaku's Gabe Layden comes from, a world where he's had $2 billion in revenue in mobile gaming, and so again, we're not personally nor at the fund are we looking to roll dice in a way that it's like a significant portion of the portfolio. So I think on the GameFi side, in its position of our portfolio, we really try to hit winners and people who have succeeded in the past. It's I am a gamer myself. I love Dota 2 and these games, and it's like there's the same studios behind these for a reason, right? So I'm excited to see what Immutable X brings in the space and empowering GameFi founders. But as an investment, I think we wait to see who the winners are.
Yeah, I think we've been seeing, kind of the shift from, like what I see saying, to like drop some NFTs, do some sales, to now, like the, free to own and engage to own kind of movement. I think that is a really good exploration because I think Web3 gaming is really about, for game developers, right? Like I spent quite some time recently in Korea talking to a lot of the Web2 gaming publishers looking into moving in space. To them, it's really, it's particularly for Asia, I think there is a very mature market for monetization already, right? Like, gachas and all these things that, Asian gaming companies love doing. And I think for Web3, it is a new model. And I think that, fungible token, NFTs, all that, one ecosystem, and how do you really balance like value accrual? How do you, kind of like protect your players away from speculators? And then how do you distribute like sort of value without, becoming too security-like? Now, all these things I think are being explored by the space right now. And I think I would love to see more games sort of like reward real players and really kind of like, imagine like Free Fire, like dropping NFTs to their most engaged users, right? And I think that model, sort of like seeing like NFTs as a layer on top of like the Web2 gaming is going to be interesting.
Got it. Yeah, Robbie? Yeah, I think in terms of the economics of gaming NFTs, right? Do you resonate with the model of requiring gamers to own the NFT first before playing the game? Do you like the free to play model? Like what kind of models are you looking for at the moment?
There's going to be a ton of genres that come out. There is no one right way to do it. The most important principles is that your economy is sustainable, and that means the value that you are giving out has to be generating some demand for the economy. As long as you follow that one simple principle, and it's not easy always to do that, then any mechanisms you have won't be inflationary excessively. We subscribe to the policy that it should be, you should maximize top of the funnel. So you have to make it ridiculously easy to play these games. You don't need to own Gods Unchained cards to play Gods Unchained. The vast majority of the games building on Immutable, you don't need to own assets in order to play. And I think the beautiful thing about Web3 is we have this opportunity to, the simplest explanation when people say, well, where is this value coming from? You're creating money from nowhere. And the answer is actually, well, games spend billions of dollars on performance marketing to Google and Facebook every year that goes into the void just to get players to try out their game. Just substituting that billions of dollars spent directly on value that can be given to players, instead backing a real economy, means that they're more likely to play the game, more likely to share the game with their friends, and more likely to stick around. So we're replacing the value of ads with the value of sharing ownership with people. And I think that's a beautiful thing. I think that's cutting out a pretty useless middle person in this operation and kind of giving away the equity of this stuff. So I think it has to be as accessible as possible. And for us personally, we're not so excited about the 100,000 NFTs and kind of the rare collectibles. I think they're ultimately going to be a category, which is the whale segment of this category. Every game monetizes via having whales at this top end. But in order for this to become interesting and for those whales to even want to spend, people have to be trading stuff for $1, for 50 cents. And I think we're going to see entire monetization models come out where games don't sell anything at all. It's purely monetizing based on secondary transactions. And that's what, for instance, Imbu has been doing for the past 15 years. The reason that's interesting is the incentive alignment between the publisher and the follower are completely aligned, which is why I think this royalty discussion is so important. Because without guaranteed ability to take royalties, you can't have this business model, which is fundamentally better for players, be protected for these games publishers who are embarking on that journey.
Got it. Makes sense. So I think, so in terms of like, whether it's art, whether it's gaming, whether it's any kind of NFT, as an investor, right, what kind of infrastructure do you think would help bring more liquidity to NFTs, bring more users to NFTs? What's lacking in the market right now, do you think?
What's lacking? A lot. But, I think immediately, I think OpenSea is a bit clunky. I think the marketplaces need to be a little bit more improved on enticing volume. And so, I think the UX is a little, retail, we'll call it, and that's very good for people who want to pick up 1 or 2 NFTs, but that doesn't really, if the hype cycle's winding down, it's really hard to get volume with 1 or 2 people buying 1 or 2 pieces of art or PFPs, right? So we personally have taken investments in new marketplace ideas, built more around a trader mentality. I think on the PFP collections, we'll probably see royalties, maybe an edgy take or not, but we'll see royalties will probably head towards 0 on these more fungible collections, where you'll see a lot more volume in that regard. But incentive-wise, I think, similar to Punk 6529 and Punk 4156, I think we all kind of agree that there's a misalignment when you're incentivizing volume in a royalty basis, and somebody could rug a project and still monetize a hell of a lot of money on the exit with that volume, with a royalty basis. And so I'd like to see people experimenting with market cap, helping collectors, I want to see a team change the royalty model towards something that gives the value to the collectors and gives them, more reason to stick around than to just trade in and out of collections. And so that's kind of, I want to see that experimentation. It's not necessarily one thing, I want to see new things with a capital N and just go out there and see what sticks.
Yeah. Maya?
So I think the trading side of things, definitely we're seeing most of the innovations coming from. We invested in an aggregator called Gem, which got acquired recently by OpenSea. And I think the trading is, as any assets, is like the first and the most important use cases. And we're also seeing the recent AMNs like SudoSwap coming up. So excited to see how that space unfolds. And on the in terms of the other side, I think the challenge of NFTs is just not enough supply and from both borrowers and lenders, from a lending perspective, and also the underwriting pricing and all that is also challenging, right? So I think right now we're in concurrent parallel sort of development between both infrastructure and content, right? You need content in order to supply asset into the class, and then also having infrastructure kind of support it. So I think that's again right now I actually think there's way too many infrastructure startups, but not enough content, good content coming into space.
Robbie? Yeah. Do you see any lacking infrastructure or things that you want to see to improve the NFT
The
market?
biggest thing missing right now is games,
Yeah.
right? And let's be clear, it's coming. Because the leading indicators are talent and VC, and more than $9 billion has been poured in the last 18 months into Web3 gaming. It's bigger than any other segment in Web3. But games take time, whereas PFPs you can create in a week, or perhaps in an hour with DALL-E and the generative image networks that are coming out. So really what we're going to start to see over the next 6 to 18 months is a lot of these high quality games come through with, I think, a much more sound understanding of tokenomics. And my genuine belief is that the top game will dwarf the rest of NFT volume combined. It'll do an order of magnitude more on a daily basis than what we're seeing from collectibles. And that's just because if you take a popular game with 250 million users, and you have a proper economy where they're trading even $1 or $10 a day, you're looking at effectively $250 million to $1 billion of regular daily or weekly volume in this economy alone. And that is going to be the number one thing which takes Web3 mainstream from the roughly 30 million monthly active users we have today to hundreds of millions. So yeah, if there's one thing, it's good games. I think there is more to be done on the infrastructure side and onboarding always. We're not there yet, but that will come. The longest sort of leading indicator that's not here yet is going to be game supply.
And I think in terms of bringing a lot of users into NFTs, I think sometimes it's important that, like, for example, Apple is supporting P2P NFTs, but the problem is there's a big fee, right? So as investors, like, are you okay with sort of big corporations and big platforms coming in, charging a lot for NFT trading and charging a lot for to NFT users, but then bringing a lot of users in? Or do you think it's better that Web3 kind of stays as it is, and NFT space is basically for crypto users?
I think the users will decide where they go. I think the Apple news is actually bullish. Like 30%. Apple royalty on a free to own gaming model is not really tripping up Gabe Layden or other free to own kind of business, gaming founders. And so if that helps them onboard, like I'll take any Trojan horse we could get, right? Like we want to get 100 million people in the open metaverse. But realistically, I think through gaming and other methods, we could get 1 billion people onboarded pretty quickly with an Apple integration. And so, however unfortunately, they're not going to bend the knee to all Web3 ideals. It's not what we should expect. But as they enter the space, I think we could continue to change them through our consumer behavior. And that's really the goal, right? Is you vote with your money, and I think Apple will learn that like everybody else.
I think we're seeing Web2 game developers are trying to converting some of their existing IPs into Web3. I think that they know that they're losing some, but they're actually winning more in the long term, right? Because effectively by giving true ownership to your player base and you're creating an open economy within your supposedly closed off system, that actually is going to boost up your GMV, right? And then that, I think, from speaking to a lot of, actually a lot of developers in Asia, I think they are going to be, first that kind of take a step in that direction. Like, for example, Nexon, right, like a Korean gaming conglomerate is converting MapleStory, which is a 20-year-old MMORPG game, into a crypto game. And I think that's massive.
I think Spotify and Netflix prove that you can get people to monetize outside of the App Store if there's sufficient motivation. And for those businesses, the commercials really matter. So I think it's going to be a question of, for some people, that 30% clip is fine, and let's pay the tax man and get users on board. But I think over time, as the value offered to players increases and as whales begin to build and have large inventory collections, we're going to see more pressure for them to be transacting outside of the platform. And I think that if we can shift one of the highest monetizing verticals for the App Store, which is games, suddenly there's significant exogenous pressure to actually, A, for them to lower their fees, or B, to have an entirely different business model. So I think overall the pricing pressure is good for better policies for game developers, and we have seen people get around it. But in the short run, it will be get the users through the most popular app stores in the world.
Yeah, and I think to get a lot of users into NFTs, you must first get them to buy the NFTs, but then the good NFTs are very expensive, right? So, what do you think is the best way for like a very small retail investor to get good exposure to NFTs? Is it fractionalized NFTs? Is it DAOs? Like what are you mostly thinking of right now?
I think DAOs are great places to share ideas, and I think no one misses on a low entry fee DAO, right? Like you're only gonna share alpha as people, their groups, but it's probably the best way to check your own FOMO. And I think you also have a breeding ground for new ideas out of these DAOs. I've seen a lot of DAOs kind of spin off into their own founding teams of things. And so, yeah, the best exposure you could get is join a community that you could trust the information in, which is very hard in this space. But you're not like, gone are the days of minting Fidenzas and ringers and stuff and like seeing 1000x. There's a lot of attention now on these things, and you can't mint for $200 anymore. Yeah. And so you really have to like accumulate what you can and use your money wisely versus taking a risk.
My advice is start from collecting things that you truly love. So I think like AC said, like gone are the days, right, minting 100 ringers, but there are still plenty of platforms. Actually, there's a very vibrant community of generative art on Tezos. And these art pieces are, less crazy than like your art blocks and 100 ETH pieces. But you still get joy by buying something that from a creator that you really appreciate his or her digital craft, right? I think from we stepping into the Web3 and digital ownership sort of era, like that. Appreciation and the love of a digital object is actually step one, and then I think the financial things sort of comes later. That's my opinion.
I think asking how do you get exposure to NFTs is similar to asking how do you get exposure to e-commerce. Ultimately, it's a category, and within that category, there are going to be hundreds of business verticals and thousands or tens of thousands of businesses. So the question is really, what do you want to be exposed to? If you want to get exposure to the general asset class, I think probably infrastructure is the best bet, wherever you kind of have your value thesis at charging for scarce block space, charging for value, or wherever in the stack. But I think the most interesting question is, we're going to see some of the most powerful financial instruments for creating derivatives, indexes across segments of NFTs that allow people unprecedented democratized access to everything. We're going to have Goldman Sachs trading desks trading digital skins on Fortnite. We'll have indexes for trading card genres, and you'll be able to go short, mobile RPGs and long MMORPGs. Or maybe you're talking about finance NFTs, or maybe you're talking about, art and luxury collectibles. But I think the question is, what do you want to be exposed to, and sort of where are you actually taking your bet on? I like gaming, I'm bullish on art, or whatever. So I think that's the question I'd be asking, but certainly NFTs is the primitive that's going to give incredibly powerful financial access to this stuff.
Got it. And I think, moving into sort of like the current trends and the future of NFTs, right? I think there's a lot of technologies that are coming out now. There's soul-bound NFT. There is NFT derivatives like NFT swap, NFT oracle, NFT options. And there's also like rent-to-own kind of protocols coming out. So like in terms of those new NFT technologies, what are some of the things that you're most interested in nowadays?
I think NFT financialization is going to be spearheaded by evaluation, and I think MetaMask, right, as like the primitive infrastructure that you use to even buy NFTs, is going to have maybe a valuation model within it that is going to kind of help these decision-making processes happen. And so I think information and at the decision-making process is, I think, what's missing with, first of all, hacks. First of all, people buying the wrong, project. Like, we're not there yet. So, I think there you need to have that in your UX. And then on a valuation model, then you could have borrow and lending without the, like ridiculous liquidations that you see kind of on like BenDAO and these other organizations. So that's going to help bring equity back into the space where there's a lot of like misfortunate events for collectors and they just lose their assets.
So I think the core challenge we're seeing is like soulbound, for example. I found soulbound to be super interesting because there's a contradiction in sometimes NFT community that are you a collector or a trader, right? Like these two are supposed to very, at the end of the spectrum, different types of personas. And so I think like for whatever consumer product you're trying to kind of have NFTs is like your, incentive layer. Like how do you sort of like, like I mentioned earlier, segregating speculators and, true lovers of, the product itself. I think that, Soban, for example, is like kind of prohibiting transfer and selling for an extended period of time. I think these are interesting innovations that I think needed to be taken in order to build a vibrant sort of community.
I think the first thing that has to come is sufficient primary volume, stuff that people want to buy. And what you find is that complex secondary financial markets emerge on anything with sufficient primary volume. We have options markets worth billions on pork knuckle because there's sufficient of that is traded every year. So I think once these markets emerge around games, around collectibles, around art, we're going to see complex infrastructure. There's a couple of primitives that are missing. One of the ones I'm really passionate around is every single NFT today is a unique market. So there's really no way to actually bring liquidity to the category of assets or the metadata of assets you're trying to purchase and trade along. And that's what we're working on with metadata-based trades, where you can bid on actual metadata rather than the asset itself. But ultimately, this stuff will get solved, and the value of it will be an order of magnitude higher than the underlying primary markets. That's what we see in financial analogs.
Awesome. Sounds good. Yeah, I think today was really productive to learn about, what I think a very unique group of investors and builders are thinking about NFTs. And yeah, thank you so much for joining us today. Yeah.
All right. Thank you. All right.